The Federal Reserve did not change the range for the federal funds rate, keeping it at 150–175% as expected. The Fed asserted that the current stance of monetary policy is appropriate to support a sustained economic expansion and labor market. During the press conference, Jerome Powell outlined a positive outlook for the US economy. He stressed that the economy would continue to grow moderately amid the strong household sector. The labor market will remain stable and the regulator is determined to achieve a symmetric inflation target. Meanwhile, inflation is rising. In November, the annual rate of consumer prices growth accelerated to an annual high of 2.1%. At first, market participants reacted positively to the chair of the Fed's comments. A little bit earlier, investors welcomed slightly hawkish rhetoric of the FOMC. However, when Powell said that he would want to see a significant move up in inflation that's also persistent before raising rates, the US dollar had weakened. Despite the subjectivity of this comment, the greenback declined slightly. It seems speculators doubt that inflation growth will remain stable. In the Asian session, the US dollar index, which measures the greenback against a basket of 6 major currencies, lost 0.34%, having sunk to a low of 97.08. The dollar-yen pair returned to the lower levels of the previous trading range, near the level of 108.47, but rebounded a bit later. Now it's trading sideways between the levels of 108.53 and 108.70. Investors are awaiting official confirmation of the US government of the cancellation of the tariffs on China's imports on December 15. In the meantime, in the long term, economists expect that in the second half of 2020, the quote is likely to dip to 105. By the end of the year, it will reach 109 amid the preservation of the status quo by the FOMC and stabilization of the US economy. The AUD-USD pair is taking advantage of the US dollar's weakness. It was able to develop an upward trend and reach the level of 0.6880 before the opening of the European trade. The pair is likely to rally to 0.6930 and 69.55. The main event of today's trading will be the early general elections to the UK Parliament. Moreover, today the European Central Bank is scheduled to hold a meeting on its monetary policy. The regulator is expected to maintain the status quo on the key rate and reduce a GDP forecast for the next 2 years. Christine Lagarde is unlikely to give a detailed outlook for the future of monetary policy and will adhere to the wait-and-see approach, evaluating the euro area economic data. The ECB will reaffirm the forward guidance following the government consultation. And we continue to keep close tabs on market developments. Stay tuned with us.